We are grateful to be joined by Bo Garman. He is a loan officer with First Financial Bank here in Fayetteville. He's been working in retail banking for over 20 years and joined First Financial back in 2012. And on their loan to the team, focused a little bit more on pharmacy side, but does SBA as well. So today we have the privilege of talking a little bit more on the SBA program, the different ways it can help business owners in growing and buying and selling businesses. And it's more of a open Q&A session today. We'd love to have with Bo, get his feedback, answer a lot of your questions here as well in the audience that we have received beforehand. So Bo, appreciate you taking time today.
Yeah, I'm glad to be here. Thanks for the invite. And sorry, I didn't know if I was gonna be in person or online here, but looks like we all made it. So I'm a little underdressed, but ready to go.
All good, no taking the time. So today, everyone knows we're going to walk through the SBA, Small Business Administration, how it differs from conventional loans and the different tools and how it offers for you to help start, grow, and buy a business. So Bo, do you mind maybe at a high level walking us through the SBA program, its mission, why it was set up, and how it differs from a conventional loan?
Yeah, glad to do it. In some ways, it is very similar to a conventional loan. The difference is the SBA, their mission is to encourage banks and lenders to lend to small businesses, people looking to acquire, expand, or start businesses. One of the misconceptions is that the SBA or the government is the lender and provides the funds, and that's not the case. The way it works is the SBA partners with banks and credit unions, and the bank or the lender actually is giving the money to the borrower. Where the SBA comes in is they offer a guarantee to that lending partner, so if the loan were to default, the bank would get some repayment from that program, which obviously lessens the risk for the banks, makes them more willing to work with small businesses, and allows it puts more capital into the system for small businesses.
So how would you say, like, the interest rates, maybe the terms, collateral, how does that all different with the SBA compared to maybe a normal loan?
The interest rate is determined by the individual bank that's lending the money, and that's obviously negotiable between whoever you're working with. As far as terms, most if we're not dealing with real estate, if you're just purchasing a business, most SBA loans are going to be on a 10-year term. And I'm going to talk mainly. There's two different programs. There's the 7A and the 504. We're going to talk mainly 7A today because I think that's probably what most of the people on this call would be interested in. So if we're just buying business assets, you're looking at 10 years on the term. And if there's real estate involved and it makes up more than 51% of the total project cost, we can extend that term out to 25 years. If we're buying the real estate and it's not more than 51% of the total project, we can blend that term somewhere in between 10 and 25 years, depending on specifics.
Okay. And you might just briefly, you mentioned 7A and 504, you might briefly just mention the difference between the two as well.
Yeah, are mainly going to be for longer term, larger fixed assets or construction projects. So more real estate. And the 7A is going to be, what you're going to see more if you're buying, an individual business, goodwill, inventory, receivables, things of that nature.
And you had mentioned initially, you're talking about, the SBA works with individual lenders and the lenders do the loan or the guarantee. One thing we work with, we do a lot on the acquisition side here, and there's a lot of banks that try and get involved in the program. There's some that do more than others. Can you walk us through the preferred lenders versus non-preferred lenders and what to look there?
Yeah, I definitely think when choosing a lender, if going SBA route, you want to look for somebody that's a preferred lender status or PLP. Essentially, what those banks are going to be, they're approved by SBA, but they're probably doing a larger volume understands the nuances and the guidelines a little better. But more importantly, it allows that institution to issue approvals in-house versus having to send that to the SBA for their approval.
They can do it in-house, you don't go to SBA, and that's it reduces a lot of the potential roadblocks. It kind of reduces the timing of the process, so it's very important there. Awesome. Well, I'll turn it over to Chase here. He's going to kind of walk through the starting business side, kind of some initial thoughts there.
Yeah, but a lot of people out there, they think they have this new $1 million idea. They're entrepreneurs, and they're kind of looking at how to get financing to get this idea off the ground. So if you could walk us through some resources that the SBA might have to help these entrepreneurs kind of get a start, whether it's funding or even just formulating a business plan before it really gets off the ground to help these entrepreneurs.
Yeah. Yeah, and like you said, startup financing or obtaining financing for a startup is a lot of times it's difficult. The SBA is a great resource for that. Prior to coming to the bank with a proposal, what the bank's going to want to see and require, and SBA is going to require, is a detailed business plan. More importantly, along with projections for up to 2-3 years on a month-to-month basis. The SBA, the bank doesn't really get involved in that business planning. Obviously, it's a great exercise for anybody looking to go into business is to put pen to paper and really think through some of these projections before moving forward. But the SBA does have district offices that can help them with that business planning. Some universities may offer that as well as a free service.
And then can you also walk us through kind of the application process of how to get an SBA loan started and kind of what that timeline and process looks like?
Yeah, I mean, I can speak to our processes, and they may be different from institution to institution, but we like to be able to get you some sort of, if you come to me with call and say, hey, want to apply, and we get the application, we get everything in good order. At that point, personally, I'll put together a package to go to a loan committee that looks at, and we have one that meets once a week. And so I like to say, within a week to 2 weeks, we can have that in front of that committee, and at that point either say yes, we're willing to move forward, or no. And that would be somewhat of a conditional approval, but there would be some subject tos, maybe appraisals, business valuations, things like that. But at that point, the bank's making a commitment to the borrower that we're moving forward. And as you guys well know, at that point, that's when we start getting purchase agreements, things like that, and insurances and all that's required. That's where things can drag a little bit, depending on the deal. Some are very smooth, some are not so smooth. But I would say 45 to 60 days, you could be at a closing.
Great. And for people starting their business, they might wonder the amount of financing they can get. Are there any limits to how much money they can get through the SBA? Are there minimums that they have to apply for? And if you walk us through kind of those guidelines.
Really no minimums. The bank you're dealing with may have a minimum. I know we kind of like to stay in that $400,000 minimum, but that's just our preference. Maximums are more important. $5 million max per individual, and that's not per deal. That's a cumulative. So if you've got $1 million SBA loan for this business, and then you still have $4 million available in your cap.
And then what are some assets or resources that people can use to collateralize these SBA loans if they haven't started their business yet and don't have maybe the cash flows of business to collateralize yet?
So the way we typically structure a deal is our borrower is going to be, the entity that's operating the business, whether that be an LLC, S corp, whatever. So that's a borrower, and then we're going to either probably have, if there's one individual or partners, they would be listed as co-borrowers or guarantors. So the collateral would be a first lien on all assets of that business that we're lending to. Okay. And then whatever's in there, most times these businesses, what we're buying or starting is going to be a lot of goodwill or intangible assets, nothing that's a hard collateral. So SBA is going to deem that as under collateralized, right? And so they will ask us to look at personal assets. So if an individual, any equity in a personal residence or rental properties or things like that, very likely could be on the table.
Great. Awesome. Glenn, do you have any other questions about starting a business or things like that before we move on to?
No, I'd love to maybe hear a good quick story or example you might have from a previous instance.
Yeah. So, we've done a number of startups, and a lot in the pharmacy space, which when we first got into the space, it was a good entry point for us because there weren't a lot of people doing it. And that, that business and that model has changed a lot. So we've pulled back on a lot of them, but we put a lot of people in business from a startup standpoint. And many have done very well. Obviously some had some trouble, but for the most part, they've done well. I would say at the end of the day, when we're looking at this stuff, I mean, a business plan is what it is, and it's important. We want to know that you put the work into it, and that it's viable, right? But the projections are what they are. It's, that's all I always tell people. The only thing I can guarantee about those projections, you're gonna exceed them or you're gonna fall below them. One of the two. And the main thing is there in any startup is to be properly funded, because if you're falling below projections, there's a need for money. A lot of times, if you're growing fast, that's there's a need for capital there as well. So that's what I would encourage it. But the main thing is be diligent in your planning, and make sure you've got proper funding.
Awesome.
That's great. And then, now that we know kind of how the SBA can help with starting a business, moving to the next part in that business process is people looking to grow their existing business. What are some common ways you see people utilize the SBA to grow their business, whether it might be a new location or new service lines offered? What are some common uses you see to grow a business?
Yeah, actually, there's been some changes to a lot of the SBA guidelines. One thing is in the line of expansion. So now, if you're buying a business for the first time, they're going to require an equity injection from the buyer in some form or fashion. But an existing business owner looking to acquire another business, if it's in the same geographic area, in the same NAICS code, or basically the same industry, we can view that as expansion, and those equity injection requirements go away. So you can essentially purchase for no money down. Obviously, people that we have a lot of customers that we made a loan to acquire a business at one point, and they've grown. They come back to us and they need either additional funds for working capital or to buy equipment or do an expansion or remodel to their existing business.
And then, are there any restrictions to what the SBA may allow for growing your business? Are there certain things where business owners might look to do, but the SBA says, you might not be able to use our funds for that. You might have to go the traditional route to get that money.
Yeah. Well, maybe not for existing, just speaking in general terms on what's not allowed. So, SBA will not, they want the borrowing business or the small business to be if there's real estate involved um, to to occupy at least 51% of that business. So it's not for any kind of a rental income. A strip center, apartment complexes, where the borrower is actually a landlord. They don't allow that. So they want that small business to actually occupy at least a portion of that real estate. Okay. Any nonprofits, those are not eligible for SBA financing. And then, yeah, well, maybe not for existing, just speaking in general terms on what's not allowed. So, SBA will not, they want the borrowing business or the small business to be if there's real estate involved um, to occupy at least 51% of that business. So it's not for any kind of a rental income. A strip center, apartment complexes, where the borrower is actually a landlord. They don't allow that. So they want that small business to actually occupy at least a portion of that real estate. Okay. Any nonprofits, those are not eligible for SBA financing.
And then, talking about uses of SBA funds and growing a business, sometimes we'll see a lot of people refinance loans. Is that something you can do with the SBA or not?
Yeah, great timing for that. Yeah, so in the past, it was allowed to refinance an SBA debt with another SBA debt, but the restrictions were very, made it almost impossible. That's lifted, and as well as in same institution. So, if I have a customer that comes to me and wants to refinance a loan that we did for them, those are eligible now. So yeah, we're seeing a lot of that, where the opportunity is there, especially for somebody that, that may have had an adjustable rate mortgage or loan, and their rate has, let's say, doubled over the last 3 or 4 or over the last year. You can go back and at least, re-amortize that and extend it out for another 10 years and pull that payment back down. Now the rate may not drop that much, but it could really improve their cash flow.
Another thing is, if a business owner has already gotten one SBA loan, and they haven't reached that $5 million maximum, would you say it's typically an easier process to go get a second loan, or is it pretty much the same every time, regardless of if you've gotten one prior or not?
To expect, so that would help. Yeah, but if it's the same entity, it does, it helps in that, because you're not creating new businesses and getting new corporate documents and all that. So all that should be, pretty much on file.
Questions on how to grow your business. I think Lane's going to go into the more typical route we see with people buying and merging businesses and kind of that process as well. So I'm going to turn it over to him.
I appreciate it. Yeah. So kind of the last section we wanted to hit here is buying a business, and we see a lot of it. We worked many different deals on the SBA side, and everyone has their ups and downs, their fun points, their challenges. But at the end of the day, it's a great program. We love it. And Bo, do you mind walking us through a little bit of, hey, I'm an individual. Hey, I want to go buy a business. I'm looking to run my own business. What does the process look like? What does the SBA allow for, and how can they help?
Yeah, no, and that's kind of our sweet spot. That's what we like to focus on, or putting people in business, or acquiring existing businesses versus, because there's a lot of value in whatever business that you're looking at, having people walk through that door day one versus trying to start from scratch. Obviously that comes with a cost. Many times it may be cheaper to start versus buy, but I've always, I've even had one of my mentors used to say, when looking for a business, you go find the one that's the most expensive on the block, because that's the one you want to buy, because it's successful. And many people, shy away from the price tag. But at the end of the day, it's a cash flow driven, model that we're looking at. So yeah, love helping people to acquire the process is, obviously, using people like yourselves, identifying a target that you're interested in. And then, I always like to say, a lot of people, I'll say, if you've got financials, send them over to me. Let's just look at it from a high level and see if this thing's got legs. And if so, and we want to move on, you can. And you got to work with you guys and buyer and seller, get a LOI in place. So we agree on, certain terms, or at least have a starting point, right? And then that point, start gathering the financials and doing the due diligence for the loan. And again, it's not that hard. What the bank's going to want to know: does this business that we're buying generate sufficient income to service the debt that's required, and then have, pay you if you need a salary out of the deal, pay you a market salary, whatever's fair, and have a little left over. And that's ultimately what we're all analyzing, right? So to go into business, what you need to be prepared for. Obviously, we'll look at personal financial statements, and we want you to have a good credit history. But with utilizing the SBA, there are some requirements, and most people want to know how much do I need to bring? What's the down payment, right? And we've actually had some changes. A lot of the SBA changes of late are very favorable for buyers or borrowers. So what's required is going to be at least 10% of the total project cost. So if that's not just the purchase price, that would be if you're adding in any, additional working capital or loan fees, things like that. So the total project cost, 10% of that. It can either come from a buyer's savings, where they just, they bring that to the table. It can come in the form, especially if it's a larger deal. Let's say it's $4 million, and there's not a lot of people that have $400,000 in cash sitting around that they're wanting to part with. And so it may be a situation where we can bring in, the seller can finance a part of that required equity injection, and it's actually up to the full amount if they're willing to put that on a 2-year standby note, meaning they're willing to say, I'll forego this principal and interest payments for 2 years to allow this deal to happen. And at that point, they can start making those payments back to that seller. If the seller's really adamant upon, I at least want to get some interest out of this, we as long as the cash flow supports that would have to go into the debt service and the cash flow. Then we can go, the buyer would have to come up with a quarter of that 10%, and the seller could take on the other 75. And you can, that can be 50-50, whatever, in any of those scenarios, but those are the requirements.
Oh, that's great. Yeah, you mentioned a lot there. Seller financing kind of led in my next question, that there's a lot of ways to structure a deal. And you mentioned a lot on seller financing. They can put it on standby if the cash flow's there. Maybe they don't. How does the SBA see, those performance-based metrics? The earnouts, the compensation that's driven off of, when I say performance, is there revenue, or it could be retention. It could be a lot of different variables. But how does the SBA view that?
Yeah, and I'm not super well versed on that. They don't like it as far as the earnout piece of it, or any. I'm trying to think if there's anything we could do. I'm looking at a deal now, for instance, that that they want to see some performance metrics, and it's not a situation where the seller can benefit from that, I guess is what I'm saying. So if the buyer or the borrower were to benefit from maybe some of those, then I think it's allowed, but it's not a situation where we could add additional capital to it.
So it's more of
sense?
if it can't go up, it can't up the purchase price, but if it reduces the purchase price, say, hey, the business didn't hit this metric, we're going to reduce this much off the note, that's favorable for the SBA.
Right, that's right.
So this is kind of a newer discussion in the SBA, we've heard a little bit on it. I want to get maybe your feedback a little bit. There's a lot of different ways to structure deals we've mentioned. Sometimes the seller isn't looking to part, or maybe they want to start a partnership. SBA before, you had to buy only 100% and the seller can only stay for 1 year, and then they had to, transition out. But are there any, new guidelines regarding, buying less than 100% of a business?
For sure. Yeah. The partner buy-in is allowed now. So if, somebody wants to buy in 25%, 50%, that's allowable. The seller is allowed to stay on for extended period of time. Obviously, if they're going to get paid through that, then all of that has to be, considered for cash flow purposes. But yes, that is now an allowable function for an SBA loan.
Yeah, that's big because it's new. I mean, you always had to just 1 year now, 100%. I mean, this is kind of a big change that, I think it's going to be very beneficial for a lot of transactions going forward. You mentioned requirements for, down payments, equity injections, and on cash flow. What would you say is like the timing to this whole process? I mean, you come in, you're under LOI, and hey, how long is it going to take me to get financing to get closed? Hey, I'm supposed to be closed by this date. How long should a person expect to, go through the loan process for an acquisition?
And I think it's back to what we talked about earlier. I mean, I would like to say I can get you an approval within a week to 2 weeks. I mean, once everything, we have everything from everybody. And at that point, that's when the real work begins, honestly. And depending on attorneys and how long it takes them to come together on a purchase agreement. But if all goes well, I'd like to say we could fund it in 45 to 60 days.
Okay, that's not bad. I mean, because you guys are preferred and have that ability that we talked about earlier to close a little faster and not have to go through the SBA, which is a huge benefit. And part of that process for the 45, 60 days is, evaluation. Could you walk through that process? And, it's programmed here at Black Diamond. We're starting the next couple of months. And, love to kind of, for a first-time buyer, hey, heard how to do this valuation. Can you walk through what that has to look like, some of the requirements there?
Yeah. So once that approval, speaking on how we operate, once that pre-approval is done, we'll send you out a letter. So here's the terms and conditions. You sign it, and that allows us to start moving forward. If we have to do an appraisal on any real estate, personal house or commercial real estate, we start that process immediately. Order that. The bank takes care of ordering the appraisal. A business valuation, if it's an acquisition, we're going to have a third party go in and value the business. We take care of handling that. We order that business valuation. Those probably, typically the appraisals, depending on what market you're in, some areas of the country are a lot longer, but 2 to 3 weeks, same on the business valuations. Those generally are not what holds us up. But we try to order that immediately. And as long as everything comes back, as we had it approved or higher, then we're good to go there. If the valuation on the business comes in, SBA is not going to allow us to lend out more money than it's worth. So there are times that whatever that LOI is, we go get it valued and it comes back a little less. And at that point, the deal's not over. That's when you need a good broker. But a couple things have to happen. You've either got to, we've got to lower the price. You need to the borrower's got to bring more money to the table. We can get creative with some seller stuff. So it's not a deal breaker at all. I mean, that's why you guys get paid, and and we like to think we're good at working and bringing ideas to the table about how to get the thing done.
Yeah, 100%. Yeah, to your point there, we've seen valuations come a little lower when those come in, and we always find a way through. And there's 100 different ways to figure out a solution. You just gotta really have open mind and be collaborative as a buyer, seller, and broker and lender. So it's kind of it's a team effort, and but it can happen.
Yeah, for sure. So you don't think it's uncommon for a seller to want more than their business is worth?
Might have seen it a few times. But not always. But no,
Yeah,
it's fun. And to the interesting side of some of the stories we see things pop up. Last year we were working on a deal, and we were struggling because tax returns are a big part of the review process for the SBA and for you guys. And it came up, the seller had it one of many entities they had, and it was on their personal return, but we couldn't get that new, I guess at the time it was the 2022, since it was last year, return file. They had submitted it. We didn't see anything from the IRS, and that was a requirement because at the point of the year we were at, that we needed that return done. So we're all under offer, under contract, we're trying to get done. And one key thing we were able to do and this is for everyone in the audience, we were able to go to our local senator, call their office. They have a liaison to the IRS, and not many people know that. And they were able to help communicate, kind of assess the problem, and work alongside us. And it kind of helped save the deal in a sense. And I don't know, Bo, if you had come across that before, but I thought it'd be an interesting tool for people, in lending situations or tax situations to have that resource available.
Oh, that's great information. I just closed a deal that got delayed because they switched how they were from a C corp to an S corp, and it was filed, and the accountant kept saying it's filed. Here's the proof of it. But we could not get a tax transcript. It just kept coming back blank. It's over and over and over. And finally we realized what had happened, and, worked with the seller's accountant, to, he was making calls every day, but no, we didn't have that resource. So that something like that could have been great.
Yeah, because as everyone knows, the IRS isn't they don't have their lines open and doors open for everyone. So it was a great resource, and I think for future it's a great resource to use in dire situations. I wouldn't recommend calling them every day, but more dire situations, see that's not a benefit. So no, that was great on buying a business. Some great resources. I think we want to kind of transition to Q&A. We got some questions beforehand from some of the audience members, so we want to kind of walk through some rapid fire questions for a couple minutes. So have you. So Bo, what for the SBA, is there any specific programs here looking at for minority owned or women owned businesses? Do they have any added benefits for those?
Unfortunately, no. I mean, there's no real benefit to the borrower as far as a break in rate terms or anything like that. Obviously, we value that. That the SBA program does encourage, lending to those people. But as far as an actual break in the the rate of terms or fees, no.
Some of these we had kind of hit already.
I just mentioned fee. Let me jump in there real quick.
Yeah,
Another thing, some of the changes, the fee structures change. So, right now, anything less than $1 million has no fees from SBA. So that can be big. I mean, it can save a lot on it. And for those that don't understand, the SBA does charge a fee, SBA guarantee fee, and that is for them to help recoup any losses and guaranteeing the banks. And so the borrower is required to pay that. It's not something we always build that fee into the loan proceeds along with closing costs, all that. So it's not something the borrower pays directly out of pocket, but they have lowered that to 0% for anything under $1 million.
Yeah, it's more of a part of the financing side that gets on that fee.
People looking to, either buy a business or grow their business, would you recommend that they kind of seek out the SBA first compared to traditional financing, or, what would be that first step you would recommend them to take, whether it be the SBA or maybe just their local bank to start?
Probably both. I mean, if I'm being honest, I mean, that would be the proper thing to do. I mean, the SBA is probably going to have more favorable terms and, maybe what's required to bring you the tables, maybe a little less. That's also going to come with a little added, work on your end to meet their guidelines. So it's probably not as easy in a process, but it may be more beneficial for each situation is different. Now, what I would be careful of is going to maybe a local bank that does 3 SBA loans a year, and they say, we don't want to do this, but we may do it SBA, and which the next thing you look up, and it's 6 months down the road, and they're still, kicking it around. Or what I always try to do for people is if it's no, I want to give them a no. I don't want to give them a slow no. That doesn't benefit anybody, So if it's not something we're interested in, we're gonna hopefully look at it and move on,
Right. Yeah, I think everyone appreciates that
Yeah.
throughout the process.
100%. I got one here, and of course, we don't want this situation to ever happen, but you mentioned it a little bit earlier. What happens in the case of a default on an SBA loan?
Yeah, good question. So everybody on the deal is required to sign a full unlimited personal guarantee, right? And so whatever collateral is agreed upon, and when the loan closes, obviously we liquidate that, and whatever's left, then if there's still a shortfall from the liquidation, then that's where SBA comes in, and they pay the bank their guaranteed portion of that portion of it. But as far as the individual, they would either be required to, come up with the difference, if they could find a way to do that, and continue to pay what's left after liquidation, or just go into foreclosure and bankruptcy, whatever.
Not what we want to happen, of course, but
No, we don't
gotta be prepared just in case.
But no, I think the big takeaway from there is, yes, as a borrower, you would file, or you would be required to sign a full personal guarantee.
Okay. And I think the last question here, before we kind of get into it, because I know we're running low on time. You mentioned personal guarantee, but is there any other documentation that's required? We talked a little bit on credit and finances, of course, but outside of those, I know some deals we worked with, insurance and stuff like that is important. Can you walk us through any additional unique documentation?
Yeah, so would require insurance on all the collateral. Not a lot of times. Most SBA is going to require. So after you do a kind of a liquidation, SBA liquidation value, and determine if it's $1 million, we've got $400,000 in collateral. There's $600,000 there. We are going to be required to take a life insurance for at least that amount assigned to the bank. Corporate documents are always going to be required. We want to see that. Insurance, that's about it.
Yeah. Kind of simple, but I think the life insurance one we've seen is something people don't really realize getting into it. It's kind of like, oh, we got to close in 2 weeks, and I also gotta get a life insurance.
No, that's always a big one. So any people listening, if you do get an SBA loan and they say you need to get insurance, I always tell them up front, let's start that process now, because there a lot of times that is at the end what's holding things up.
We're going now. It's insurance is the thing they're working through. It's the one document, so it's not a hard process. Just it's a timing.
Yeah, for sure.
Well, I know we're kind of running the last few minutes here, so no, Bo, appreciate you taking the time today. In short, really great information on SBA and the different tools and requirements needed. and how it can help a lot of people. Really appreciate your time and everyone coming to join us today. Bo, do you have any last kind of final comments you wanted to make?
Well, I'll say, it is, there's a lot there. And, I've been doing this for a while and still get surprised, but, you know, we're always available to just bounce off ideas. A lot of what I do, I always tell people before you even go to an LOI, if you're thinking about something and you want to just send it over and let's just take a look at it and like I said earlier, see if it's got legs, and go from there. Always happy to do that. It doesn't take that much time, but I want to just thank you guys for having me. Look forward to hopefully working with you and getting some of your deals financed for you.
Yeah, likewise. Appreciate it. Hopefully we can, and really appreciate your time today and everyone who in attendance for taking time as well. And have a great rest of your day.